So you have to deal with the way people behave, like part of their fundamental wiring. Human beings like to be right. They live for being right, and they don't like to be wrong, and they don't like to be told that they're wrong. So what you have is people are justified in their current position. And then you have to deal with one of the biases, which would be confirmation bias, which would lead you to, as a human being, seeking out things that confirm your original position.
What you don't know is costing you commas and zeros. Welcome to the Owner's Profit Playbook. I'm Pat Mancuso. Most entrepreneurs think their biggest challenge is growing revenue, but the real problem is the profit leaks hiding inside their business. On this show, we break down the strategies, structures, and financial blind spots that separate struggling operators from truly profitable businesses. Because building a business is one thing, but building a business that creates wealth, that's the real playbook.
Welcome to the Owner's Profit Playbook, the show where we help business owners uncover blind spots, missed opportunities, and silent profit leaks that are quietly stealing their commas and zeros that they should be keeping. I'm your host, Pat Mancuso, strategic advisor, tax mitigation expert, and the creator of the Owner's Profit Playbook. Here's the truth that most business owners don't want to hear. What they don't know is costing them commas and zeros, and that's a big deal. It's not just in taxes, not just in cash flow, but it's legacy, it's control, it's optionality, and in many cases, the entire outcome of your entire life's work. Now, today's conversation is about one of those areas, and frankly, it's one of the most misunderstood and most avoided areas for business owners. What do you think that is? Well, I'll tell you what it is. It's estate and exit planning, not as paperwork, but as a strategy. My guest today is someone who doesn't just live in this world, he helped define it. He is a legend. He is amazing. I'm blessed to have an opportunity to be in a relationship with Vince. So let me tell you, Vince Adana has over 46 years of experience working with business owners, families, high net worth, in the estate planning, exit, retirement, distribution strategy, and investment coaching. So he just doesn't do it. He teaches others to do it. He was inducted in the Estate Planning Hall of Fame in 2017. So now I know somebody who's in the Hall of Fame. We don't have to say what Hall of Fame it is. But he's in the Estate Planning Hall of Fame and is widely known as the expert's expert, the person who advisors turn to when things get complicated. So I am excited, Vince. Welcome to the Owner's Profit Playbook.
It's good to be here. Thank you for the invite.
So, Vince, I've already talked about your recognition, your accolades, but give me kind of the 2-minute overview. What brought you into this industry?
That's a story. I went to Cornell University. I graduated from Bronx High School of Science, and I thought I was super smart, and that I wouldn't have to work in college. Bad choice. Theoretically, I was supposed to go to medical school. I ended up shooting pool probably 6 hours a day from sophomore year to the end of senior year. And, yeah, that's true. And then, medical school was off the table. And the only industry that was hiring was the financial services industry. And I found it to be wonderful. It was infinitely complex. It required a lot of thought. And, it became my home.
I love it. Well, the next time we are live and in person, a cocktail and a game of pool, and we'll see who buys the second cocktail.
I worked very hard to play well, and I haven't played in a long time.
I love it.
So you beat me badly.
Well, there you go. So one sentence why estate and exit planning is so misunderstood.
I think, well, it's a little bit more than one sentence. I think that when people hear the words estate planning, they naturally assume they're going to be giving up control of their wealth, and they're not going to be able to control it, and they're not going to be able to get income from it. And that's just simply not true. And exit planning sounds very terminal. And I think that also puts people off.
Right.
Some call it succession planning. Exit planning means a lot of different things. Are you exiting to your family? Are you exiting to a key employee or a key employee group? Are you exiting to a third party? But the one thing I'm sure of is that you have to plan for it in advance, because if you don't, you will end up suffering in some way.
So why don't more people plan in advance? Like you just made a statement which is so simple and yet so impactful, and yet most people don't do it. And the reason I wanna tag on this is that's exactly what this podcast is about. People don't know what they don't know, and yet there's still people who aren't doing these things. So why do you think that is?
Uh, well, think about any business owner is going to be very busy working in their business
Right.
and not on their business. You have probably said that 15,000 times on your podcast, right? It takes something to step out of the picture and look in and then make a determination of what you have to take care of.
Right.
You also have to find an individual who can guide you through all that. You can't get it from a book.
How about the internet and AI?
It, there are studies. The young people are like stuck on TikTok and Instagram, and there are actual studies that say that if you follow those instructions that you see online, you will actually lose ground relative to people who don't pay any attention to that stuff.
So in all actuality, there's still the knowledge base that someone like you has to interpret the information that may be available out there. I mean, is that a great way to say it?
Well, yes. So I talk about this with my son all the time because my son is like super smart and he's got a lot of knowledge.
Right.
And I every so often I have to say this to him. I go, is a tomato a fruit or a vegetable? And he says, well, Dad, everybody knows that it's a fruit. I go, that's knowledge. But knowing not to put it in a fruit salad is wisdom. So, there's a big distinction between knowledge and wisdom. And you
Right.
only have wisdom by time served.
Wow. Okay, that's something to ponder for a second. Full transparency. First time I've ever heard a tomato is a fruit. Oh my goodness gracious. Seriously?
No, like for real.
I had no idea.
It's actually a fruit. Yeah.
People hearing this podcast will probably learn the same thing, or they'll think that I'm nuts, but that's okay either way. We're good. So, let me interject this. So let's say that somebody's 50 years old, they own a business, they still haven't started thinking about estate planning or exit, and their first thought that they've had is, well, it's too late.
Oh my goodness, no, definitely not too late. Matter of fact,
Right.
probably the best time. Actually, this I'm gonna like doing proverbs today. So when's the best time to plant a tree? 20 years ago. When's the next best time? Now. You there is no excuse for not taking action in the now to produce good results down the road. First of all, we know what the laws are right now. We won't know what the estate planning laws are in 3 years when this term of presidency is over. We won't know what it looks like, 4 years after that.
Right.
We're not that good at predicting stuff like that. And if we're not going to be that good about predicting stuff like that, we just can't predict. And you want to take action and the moment that you can take the action, which is in the now.
So I hear this all the time from people. I already have a plan, and I feel like that's just a statement that they rely on. Why is that a dangerous phrase? I already have a plan.
Well, everybody has a plan. Not planning is a plan.
There you go.
It's just the question is, do you want to be at the effect of the world or do you want to be cause of the matter? And, I meet people who are worth an unbelievable amount of money and they say, I have an estate plan. I go, what's that? And they go, well, I have a revocable inter vivos trust. I go, okay. And so what's your estate plan? That's not an estate plan. That's like, okay, you avoided probate, maybe,
Right.
right? So in general, and unfortunately, people don't know what planning could be. So
And why do
the
you think
limit.
that is?
I'm going to say another thing that some of your audience won't like, but
That's okay.
I ask the question often of clients, prospects. I say, what do they call the person who graduates last from medical school? And they say, doctor. Okay, great. So is that the person you want working on you? It's finding competent professionals. It's not even a matter of competent. You want to find great professionals to work with, because competent may be the minimum. It may be the minimum. So I walk into all sorts of situations where people have attorneys and accountants, and there's still more to do. In some cases, there's an unbelievably amount more to do. In some cases, it's less, but you have to continue to think in terms of if there's more to do, you got to do what there is to do.
Right.
Based on what I said earlier, which is you have to take action while you can.
Because a lot of people, do you feel that this is a fair statement? A lot of people, particularly who own businesses, but this would be high net worth individuals as well. Most people wait too long, and then in turn that costs them too much money, which then impacts when they do ultimately exit, how they get to live the rest of their life. Do you think that's a fair statement?
Yes.
Yeah. Do you also feel like many times, not all times, but many times, that the advisors around them, let's say their attorneys or CPAs, their wealth advisors, their life insurance, those people are in silos and they're not all on the same page or line for that particular client? Is that a fair statement?
That's definitely true.
Yeah.
In many cases, you need somebody to coordinate the action in order to get the result that you're looking for.
Right.
But also, I will say, like, I work all around the country, and I would tell you that in many communities, some of the larger individuals, bigger businesses, higher wealth people, they've outgrown the professional help in their community.
Right.
Like they may have an accountant that was their best friend in college, and what they need is somebody who has done many deals on exit, right?
Yeah. And here's what I believe, and you and I have talked about this, is that I don't need to be the expert in wealth. I don't need to be the life insurance expert. I don't need to be the CPA expert. What I need to understand is people in business and how to connect the experts and then quarterback that. I think
Yeah.
that's the biggest missing piece right now for people, for business owners, and every business owner I talk to. I talked to a business owner 2 weeks ago, Vince, who paid over $2 million in taxes last year.
That's a number. Well, if he made 20 million, that's not a bad number. But if he made 4 million, that's it. That's bad.
That's bad. Yeah. And so I do think that the silo piece is a real big piece. And that's, and I know that's what you're committed to, helping business owners. And that's what we're committed to as well, is that having these conversations, aligning ourselves with people like yourself and the other folks that we've aligned ourselves with in tax mitigation, tax planning, life insurance. We've done an agreement with Garrett Gunderson, amazing individual in the life insurance and wealth building. We're in a relationship with Ed Lyon. Again, these are high level people who are having the conversations with business owners on an everyday basis and who are experts in their fields, just like you are. And so we're super excited about that. So I want to shift gears.
I do want to say something about that, Pat. So,
Yeah.
One of the advantages of being in the business for 46 years and being a good actor and having a clean record is having relationships with professionals that do what I don't do. Like
Right.
I have a familiarity with all the elements of
Right.
exit planning, but there's stuff I actually do not do myself. And so you need the pros to come in that domain and get the job done.
Right. Yeah, and that's a big deal. And here's the thing that I've also discovered is there are a certain group of people who may have access to that information, but there's a lot of people who don't have access to that information. And it's not that they couldn't get access. It's not that they're not smart. It's just the connections, the silos exist, and so that's what I know you know this. That's what we're committed to. Having done business with so many businesses over the last 3 years, it was something I discovered is that they were in silos, and the information they was getting. It's like the difference, between you talked a reference to a doctor earlier, doctor and brain surgeon. They both do great things for people, but they don't do the same thing. One is a specialist and one is a general practitioner. So,
Very, very, very true.
yeah.
Very true.
So I want to play a little defense here. We call this the owner's profit playbook, and we fashion it around sports, if you may. So you and I both know that owners don't usually fail because of one big mistake. They fail because of blind spots that compound. So I want to walk through some of the biggest defensive breakdowns you see. So here's the first one. Why do so many business owners believe they're covered when in reality their plans would collapse under stress, whether that is stress of a sale, market shifts, incapacity, conflict, or death?
Well, so you have to deal with the way people behave, like part of their fundamental wiring, right?
Right.
Um, we human beings like to be right. They live for being right,
Right.
and they don't like to be wrong, and they don't like to be told that they're wrong. So when you have so what you have is people are justified in their current position. And then you have to deal with one of the biases, which would be confirmation bias, which would lead you to, as a human being, seeking out things that confirm your original position.
Right.
So you go through, the starting point is you got to deal with human beings. And human beings have to understand that there's something outside of them that they may not be familiar with. So conveying that and getting them to the point where they see stuff is a big deal. Okay. Then if we go, now I personally believe that it's really important to have your estate plan completed or at least in progress before you start to attempt to exit. And the reason why is for many people, the estate tax is a big bill. It's 40% in excess of certain credits. And quite honestly, while the credit today is $30 million for a married couple, can't even guess what it's going to be in 10 years because it's a political football. Just like Social Security is, and they're going to take away Social Security, like all that stuff. Nobody
Right.
cares about wealthy people, so let's go get them. It's always an attitude. And then you have, there's a certain faction that wants a $2 million exemption for a married couple. There's a faction that wants $6 million. There's a faction that doesn't want an estate tax at all. But how can you're not predictive of that, right? I mean, how could you possibly know how it's going to go? So taking the action to protect your wealth first is important, okay? And I believe that in all my heart of hearts that you have to do that first. Because if you're going to grow the business to prepare for exit, I'd rather grow it in a highly protected environment first, no estate tax like that, than to grow it and then try to figure out what to do about it. That's my fundamental position.
Yeah.
And there were many people that I've taught that agree with me, but then there are lots of people that I haven't taught that they believe what they believe.
Right.
So the second thing about that is, and this is one of what I just did was a corollary to the main point, which is you have to protect yourself from running backwards. Like how can you grow your business without a floor below which you can't go? So we don't think about, let me give you an example. Like we have key employees. Key employees can theoretically hijack our sale because they could say at the end when you
I'm
go to
leaving.
sell it, what about me? What are you giving me? If you don't give me something, I'm leaving. But the buyer is buying a company that's whole and complete in most cases that has key
Right.
employees, right? So how do you bind the key employees to the company? How do you protect your IP? How do you protect your wealth from a lawsuit? Those are things that you have to do. Now, then you have to think about the world of value driving, right? And
Right.
And a lot of business owners go, I think I got everything handled, but you can't see what you can't see.
Right.
So an outsider looking in may discover things to discuss with the business owner that would actually make a huge difference in the value. Real life example. I have a company that I do business with, manufacturer, and their EBITDA is like, it's huge. It's like $60 million. It's enormous. Big,
Big.
big, big company.
Yep.
And they're on appraisal for sale. The company is not worth 10 or 12 or 15 times EBITDA. And the reason why is because they have concentration risk. They have two clients that buy like, well, this was from a couple of years ago. They were like more than 75% of the entire sales of the company.
So if
You
they
lose,
leave, if that client goes away, the value of that company is severely impacted.
right now, what they did to fix that is they now have 40 salespeople that actually got the two big companies down to 60% instead of 75. That's a massive increase in value.
Yeah.
Massive. Now, in doing so, by the way, they also went from like $50 million EBITDA to 60, which is great, but 60 at a lower multiple because of the concentration risk is not good. Now they're at 60 with a lower concentration risk. That's a big deal. Now, sometimes it takes an outsider to tell a business owner that there's a hole there that has to be filled.
Well, and what you're hitting on is really fundamental, foundational, in that they don't think about, understand it, see it. They've never exited in a lot of cases, which means they've never gone through the process. They've also never necessarily bought anything, which means they've never done due diligence on a purchase where these things come up. And I look at that again. This is a part of this conversation. We have massive amount of baby boomers exiting businesses, and they're just not even thinking about this conversation, and yet they're thinking they're going to walk away with a crap load of money.
Yes. A way that I like to explain this to business owners is I say, if your business was perfect, you would get X,
Right.
$20 million. Then for everything that you don't have in your business that's perfect, oh, by the way, and what perfect would give you if you're selling to a third party would be all your money now in cash, right? All of it
Yeah.
now
Perfect. Yeah.
in cash. That's perfect.
Yeah.
So anything that's not that any piece that's not perfect drives down the price. So if you don't have a good C-suite, if you don't have people, like if the business owner is filling like half the org chart, right, which happens in a lot of small businesses, if that's the case, lower value. If they have that concentration risk, lower value. If they have HR issues that are embedded in their mix, I have a client I'm working with now who happens to have a business where there may be a bunch of people with, let's call it fake social security numbers.
Oh, that'd be a
Okay.
problem.
Well, I told this to them a year ago, and they said, no big deal. But meanwhile, that just knocked the price down. Like in the last few weeks, that literally knocked the price down. So they had an HR issue that was unresolved. So again, and by the way, if you're filling all the boxes in the org chart, then you get an earnout. You have to stay, right? Instead of all your
Most people
money,
don't understand that either.
yeah, all your money now and in cash.
Yeah.
Now you're going out and working for the man. You went from the entrepreneur to the guy who's working for somebody.
And in a lot of cases I mean, this is what I understand in the world that I've lived in. When they do earnouts, they generally don't get all their money because the earnout doesn't go exactly the way that they wanted to, and now there's an impact that they hadn't expected.
Yes, yeah. These are all things that impact. So value driving is important. Okay.
Yeah.
Then, okay, so that's a piece. Then people forget that your highest return may be in avoiding tax rather than trying to get more return. So you have to focus on being tax efficient. You have to focus on, how you're going to deal with your taxes at exit. And then you exit, And then you have to figure out who's going to manage your business or
Right.
manage the assets, right? Because that's a big deal. Um, and there's another thing that most people don't focus on, which is what are you going to do next? Because when you survey business owners, I have not done this survey, but I know of these surveys, 70% of the people who sell their companies are absolutely, totally miserable.
Within 3 to 6 months.
Yeah, yeah.
Yeah.
And the
You know,
and I'm going to add, I got to add one more thing. So there's something called sudden wealth syndrome. When you have a business and you're getting a paycheck and the business is going up in value and it's doing well and you have profits and stuff like that, that's different than having $20 million in a portfolio. It's different.
right.
And I think everybody on this podcast, listening to this podcast, has heard of sudden wealth syndrome, or affluenza, where lottery winners win a whole boatload of money, and then in 5 years they're bankrupt. Right? They don't know how to handle money. They handle their business fine, but money itself is a very different animal. I heard like 5 days ago, a guy who I thought was wildly successful sold his financial practice. This is a financial guy, sold his financial practice, walked away with $8 million net, is now broke. Broke.
wow.
Financial guy. So, there's a lot of pieces to this. And unless you have outside eyes looking in on it, it is very hard for the business owner who's busy running at 120 miles an hour in his business to go and step aside and say, there's holes here that have to be filled.
Right. So there's two things I would add to that. And again, I always want your feedback because you are the expert. First, most people build businesses and then when they exit, they miss the fact that their tax rate changes because when they were running the business and owning the business, their tax rate was impacted by owning the business. Now they don't own it. So in theory, if they don't do some things, their tax rate goes up. True or false?
True.
Yep. And then the second thing is that you already touched on it a little bit, but when you're going through this process and you haven't actually thought about what the finish line looks like after they sell. In other words, what am I going to do? Where am I going to live? How am I going to live? And they haven't done that. And now they get to the point where somebody taps them on the shoulder to sell, or they're frustrated and they decide to sell. Now that's why they're unhappy when they sell, because they actually haven't thought about what it looks like.
Yeah. You have to plan for what's next.
Right.
There are actually books on that. You have to really think about that. That's, by the way, that's nowhere near my specialty. Like I know enough about it
Right.
that I know that people should take care of that, but that's not what I do. And
Right.
I have friends in the business that actually do that work.
Well, that's the whole point, though, Vince, is that it's got to be about the conversation, not about the individual who delivers the product. It's got to be about the conversation. And there's not enough of these conversations happening to understand with that business owner, no matter where they're at right now, there are pieces they need to start thinking about right now, having conversations around, talking with experts, but they're not even having some of these conversations. And that's just the thing where my passion is bringing folks to the table like you and like the other folks that we've aligned with. It's just, as a business owner, I've started business, exited businesses, built businesses, scaled businesses, and talked with hundreds of business owners like you have. So I can have the conversation with the business owner. I don't need to understand their particular industry because it's a business, right? They live on financial statements. They live on balance sheets. It's just about the conversation. It's just, man, we got to have more of these conversations. So I want to go ahead. I know you were going to say something.
I think I was going to say that, getting the at bat to have the conversation is the hard part.
Right.
And when do you do it? You meet somebody at the club and you have nobody wants that, right?
Right.
So you have to have some way in so a business owner can say, oh, well, tell me what you do, how you do it, what you're known for, and then you lay that out there and they go, okay, well, that might apply to me. Well, I know it applies to them, right?
Right.
So you have to have a compelling and seductive narrative that has them raise their hand and say, help me.
And I think that's 100% true. And I would just add, tag on, I think it's the ability to ask questions that they haven't been asked before, or, haven't even thought about. Because if you open up that space in their brain to go, whoa, I hadn't thought about my tax rates going up when I sell my business because now I don't have the deductions that I had when I owned the business. Like, whoa, I hadn't thought about that. Okay, well, you can think about it now or you think about it later. And so I think that's a piece of it. So, by the way, I already know that we're doing a series with you because we could have conversations on all of these pieces. And I know you've already agreed to it, but as we're talking, it just becomes so obvious that there are parts to this that you can bring such value to in the conversation, and the conversation will open up people's mindsets. So, I want to flip. I want to go on offense here. What does good planning look like to you?
Well, I think the process is important, right? Um, I think here's the truth: business owners don't care about my process. My process is really backstage. What they really want to know about is the value that I claim that I'll be able to produce for them. That's the big deal, right? But I have
Right.
to have a methodology, and my methodology is we start with any one of a number of questionnaires that drill into elements of the business. Like you want to know based on the data where the company fits in this continuum of value. Are they an average firm for what they do? Are they a superior firm for what they do? If they're average, that means they have a lower multiple for the EBITDA that they've got, right? So you want that. You also want to know what they've done about running backwards. Are they going to run backwards? Is there a possibility? So you get past that, and then you start to craft the solution, which again, for my purposes, typically starts with the estate plan and making sure that their stuff goes where they want it to go,
Right.
while protecting it from the known predators, which is divorce, lawsuit, and transfer taxes. Right? Transfer taxes being gift, estate, and generation skipping tax. So we come up with solutions in that domain. And then, there are business agreements that they don't have.
Yeah.
They may not have a buy-sell agreement. If they have a buy-sell agreement, it may not be funded. If they have compensation agreements for executives, well, actually, most companies don't. They should probably have that.
Yes.
They should have non-competes. They should have all these pieces that stop them from running backwards. And then the conversation is about value driving. And for that, they bring in, I mean, even if it was EOS or any of the others, I can't have another one I'm thinking of, but I can't remember the name. But
Well,
there's a whole
EOS is
bunch.
one of the bigger
Yeah,
ones.
yeah. So
Yeah.
there are people that for a fee will help you craft a more solid business. And then financial advisory actually really exists at the beginning of a process and it exists at the end of the process. So for financial advisory, there's probably a wealth gap between where a business owner is, both with personal assets and business assets, and what their life goals are. So that, at the very beginning, you're talking, it is in the questionnaire phase, right? So you've got, I want to do this, this, this. I want to take care of my employees a certain way. I want to take care of charity a certain way. I want to take care of a family a certain way. All of that requires money.
Right.
Okay. The money is satisfied with only two things: your business assets and your personal assets. And the balancing chip is really the business, because the business is easier to drive value in than your personal assets.
Right. Right.
So the financial advisory work is very important at the very beginning. And then at the end, you have money. You have to decide how you're going to deploy it to live your life. Distribution planning is very different than accumulation planning.
And yeah.
How do you take your money? What do you take first? How you should be positioned? Do you need guaranteed cash flow other than Social Security? How are you dealing with the taxes that you have embedded in your 401k or
Right.
pension plan? Like those are all like, again, getting rid of taxes or reducing taxes is important. Okay.
You touched on something, and I was watching, you made the gesture, this and this. And so for businesses, right? Like where they are now and where they're going to be when they exit.
Right. Exactly.
As a percent, in your experience, how many business owners know where they are now in terms of real true value based upon the numbers in their business? I already know what your answer is going to be, but I need to get it on tape.
Less than 10%.
Yeah. Yeah. They think their value is how much revenue they had, and they think that that's, you know what I'm saying? I mean, and so the reason I bring that up is you can't really do a lot of what you're talking about effectively and exit effectively unless you know where you are, and then you can effectively build along the way to get to that point.
Yes.
And, you know, it's one of the reasons why we've got a relationship with Biz Equity, where we're offering companies free valuation in terms of where they are right now. And then our tools will help them define what they need to do and where they need to get to along the way. And again, it's not an absolute perfect science because nothing is. But the point is it's better than what 90% of them have now, which is nothing. They don't know what their businesses are worth. Might have an idea what they think it's worth, but it's usually not the case. You think that's important for them to know that?
Oh, yeah, absolutely.
Yeah.
Absolutely.
Okay.
Look,
So,
the idea is to fill the knowledge gap.
right.
There are things, there's the knowns and there are the unknowns, right?
Right.
And it's the unknowns that where people get into trouble.
It's the blind spots.
Yes.
Yeah, absolutely. Okay, Mr. Vince, we're going to shift gears again. I call this my rapid fire questions. These are the biggest estate planning myth business owners believe. And this is like, I'm going to fire and you're going to be like your quick response. So it's like rapid fire. It's like the 2-minute drill in 10 seconds.
Just like life.
And I haven't prepared you for this, so this is going to be fun.
Go.
What red flag tells you that an owner's plan will fail?
When they don't have a business plan and an exit plan that they're living into.
Most overlooked risk in exit planning.
Key employee risk. Right. Again, if you're filling the entire org chart as the business owner,
Right.
that's the same thing, but just like amplified.
Yeah.
But if you have employees that are valuable to the business, that big problem. I'll share something with you. When I was young in the business, I never really did key person life insurance because I go to a business owner and say, if Bill died, would you be okay? And they go, yeah, my business would function. Well, it was the wrong question.
Yes.
The wrong question is if Bill dies, how much will EBITDA affected? Like he's the guy who's in charge of the sales division.
Right.
And he goes and you lose a couple of $1 million of sales. That's could be anywhere from $5 to $10 million of business sale value.
Yeah. Yeah.
Right. That's a different question.
Different question. Or even different question is if Bill's your partner and he dies and now his wife gets his assets and that's not good.
Yeah, buy-sell planning is critical, no doubt.
Yeah. Yeah. The costliest mistake you see too late to fix.
So you can pretty much buy any financial product tomorrow. The only one you're not guaranteed to buy tomorrow is life insurance. Because you could become unhealthy, you get older, like all sorts of things that go against you.
Right.
Time is not your friend. So you want to make sure that if there is a contingency that is solved with life insurance, you buy it and you buy it like yesterday.
Yeah. And that's been, Vince, you've educated me, and obviously that's one of the ways we got in a relationship was when we came to you and we were in different stages of what we were doing and we're like, well, I don't have enough life insurance based on what we're doing. And you were able to get me, I thought a huge amount based upon my age. And you're like, well, that's pretty good. And right, like you don't do this now, you're probably not going to get this down the road because you're going to get older and you're going to have other issues. So the other thing I want to plug in here.
Actually, let me say one more thing about that. People get confused. When I started in the business in 1979, a millionaire was somebody who had $1 million of assets.
Yeah.
Today, a millionaire is somebody who has $1 million of annual income. We get confused about dollar values.
Right.
Some people think that $10 million is an awful lot amount, incredible amount of money, but it's really the equivalent of $350,000 a year of annual income. Like we don't think that way because we get stuck with this number, but the number is not what you're living on.
Right. Yeah. And I have, and I'm saying this respectfully, and I'm not blowing sunshine up your, you know what. But one of the things that I appreciate about you, and in every conversation we've ever had, I brought my daughter into this conversation with you, is you educate, and you don't tell, you educate. And I think that's just so important. It's about the education, right? It's really about the education. Okay, Vince, I know we have a hard stop at the top of the hour here for you. So I want to give you two things. One, opportunity, last thought. But before we get to that, if somebody wanted to reach out to you, what's the best way, best place for them to do that?
So my planning company is Valent Wealth. That's the logo right behind me over here. And they would go to vince.dodona, Daddona, at valentwealth.com. They reach by email, or they can use my phone, which is 917-453-4008.
Love it. I love it.
And they can always contact you, Pat.
They could always contact me as well. Absolutely. And they will, because this was amazing. I can't imagine a business owner who's listening to this that is starting to ask themselves questions and understands they need to take action right now. If not for them, for their family. I mean, a lot of what you talked about, there's things mixed in here about things that are unexpected. I saw, I don't know how you feel about this, but I'm just going to put it out there because it's who I am. I just saw before we came on, Chuck Norris had died. And I grew up with Chuck Norris. I know you didn't know, did you? And I was shocked because not only was he an actor that I respected and grew up with, but he also started a company that is in the health world. And I'm taking his supplements and doing the things. I'm like, oh my gosh, he's 86 years old, but yet he didn't know he was going to die today. Stuff happens, right? And that's the part about we need to do better planning, because it's not about you're not going to die. It's about the people around you now have to pick up those pieces.
You really bummed me out just now. I mean,
I'm sorry. I'm bummed too.
I love that guy. But that is, that is the point. You don't know when your ticket's going to get punched. You just don't know.
No. Well, I know this, Vince. This has been incredibly valuable. We're bringing you back. We're going to do a series. We've already talked about that. Business owners, this is about control, clarity, and choice. And the biggest risk isn't doing it wrong. It's not realizing how exposed you are. We've already talked about how to get in touch with Vince. We appreciate your listening, and we always appreciate you subscribing to the podcast and sharing it with people, because it's really about education, whether they use our services or Vince services. It's really about education and understanding how all the things we've talked about impact your wealth. Vince, thank you so much, brother. I appreciate you.
You're welcome. It was great being here.
Yeah, I appreciate it. Thanks, everybody, and tune in to our next episode of the Owner's Profit Playbook. And for now, have an amazing day. Take care.
If you're serious about building a more profitable business, make sure you subscribe to the Owner's Profit Playbook so you never miss an episode. And if you know another business owner who could benefit from this conversation, share it with them. To learn more about how we help business owners uncover hidden opportunities and strengthen their financial strategy, visit mancusocg.com. And remember, what you don't know is costing you commas and zeros.